Hello, everyone. Ladislas from the wanderinginvestor.com. So today I'm really excited. We're going to be speaking with Tim Staermose. Tim, how are you?
Very well, thanks, Ladislas. Here in Dar es Salaam again. I was in Dubai briefly recently, but I'm back here in Tanzania. Good to be back.
Fantastic. So Tim manages the African Alliance Fund, and he's the one who organized the meeting with the CEO of the Nairobi Securities Exchange that I posted last week. And Tim, so today let's discuss a few points on equities in Africa. You're an expert, and let's dig deep into Kenya. I'm interested in getting your perspective. So you saw the video and the discussion I had with Mr. Odundo. What is your take on Kenya?
I was in Kenya myself back in December and early January for 3 weeks and had a bunch of meetings. A lot of them were like this one over Zoom because people were still very nervous about COVID and that sort of thing. Lucky that you got an in-person meeting with the NSC. That was great. But I think Kenya is one of the economies in this part of the world that has come a very long way and also has a very bright future. But they're in a period of difficulty is how I would describe it. They've built a lot of new infrastructure. They borrowed a lot of money in order to do that. And they're having a tough time servicing those loans at the moment. That's the first thing that I would say to anyone that's looking at Kenya. And you went into that with the CEO there in the interview. And, it's great that these things have been built. Now they need to work out how to generate an adequate return on them. And as a result of them being in this period of difficulty, they've gone to the IMF. They've essentially had to borrow another $300+ million in order to service these loans and sort of tide them over. So that's the macro concern that I have. The currency weakened a fair bit last year. It had historically been trading at around 100 to the US dollar. It weakened to as low as I think 111, 112 when I was there. Strengthened a little bit recently on the news of the cooperation with the IMF. But again, in recent days, it's headed back towards 110 from what I can see. Inflation rates are not as bad as in most parts of Africa. The inflation's under control. And it's a fairly vibrant place. There's plenty of construction going on. There are regional area headquarters for some of the big businesses. Oracle is there. Microsoft is there. Google, I think, has stuff in Nairobi as well. Very successful business in Kenya that everyone likes to talk about. So it's a mixed bag. There are macro headwinds, but there's still a real sort of entrepreneurial drive and spirit in the country that I think augurs well for the future if they can reap some of the benefits from this infrastructure that has been built, which is still ongoing. So that's kind of my view from 40,000 feet.
Yeah, like all the infrastructure development was really astounding in Kenya. And to your point, the entrepreneurial drive is really there. Just as in Europe, in some countries, people are more entrepreneurial than in other countries. Same thing in Africa. In Kenya, people seem to be on average more entrepreneurial than in some other countries. So that's also a very positive point. So how do you do your position sizing in terms of jurisdiction? Because there's Kenya, you deal with so many jurisdictions.
Yeah, so for those who are not familiar with my fund, I invest in African sub-Sahara frontier markets. So that means everything sort of below, Morocco, Tunisia, Libya, Egypt, those countries, but not South Africa, because South Africa is a developing market, not a frontier market. I have a bias at the moment towards East Africa, because this is the region where I'm based and have done more traveling and research. West Africa, I have started to invest there, but I haven't been able to go over and do any real boots on the ground research as yet. It's all been, Zoom calls and calls with management and earnings presentations and things like that. The spark for my entire fund was a trip I did back to Tanzania 3 or 4 years ago. And this was the market that I first became really interested in because of the low valuations and sort of the lack of interest from foreign investors. I don't have a scientific, X amount of money in each country model. It's more of an art than a science when it comes to capital allocation for me. That said, my fund has very strict parameters on maximum exposures that I can put in any one things like that. So what we say is to the one country, and the fund's mandate is to invest in only 10 to 20 stocks across all of these African markets. So as you can imagine, we're fairly fussy about what investments we make. The universe of companies across these markets, it's nothing like in Europe or the US. There simply aren't that many listed businesses in Africa, but there are still 700 or 800 possible companies to look at. So if we're only looking at 10 to 20, we're going to be narrowing the list down a lot. And liquidity, in other words, how much of a stock can you buy and sell in a given period is also a high consideration in what we do. So we tend to be buying the number one or number two player in an industry or a sector in each country. So we own, a lot of banks, for example. 50% of the indices that are in our hurdle rate benchmark are financials. So there's a huge bias towards that in terms of the listed equities that are exposed or that you can get exposure to here in Africa. So we don't have 50% of our money in banks, but that's what the index reflects. But in terms of allocating to positions, I look at each country from a macro point of view initially, just to make sure that it's reasonably stable and has good growth prospects, and that there are, there's a basic rule of law, and there aren't too many red flags. So certain countries at the moment are off the list. They're in the sin bin because of macro factors. Nigeria, unfortunately, at the moment has huge problems with foreign exchange. It's simply not possible to source foreign exchange in the Nigerian market to repatriate the sales proceeds when you sell something, for example. So that's a market that I am not going into as yet until they sort out this issue. Zimbabwe, is also plagued by foreign exchange problems. And Zambia has been another one that's in trouble with exchange rates at the moment. They actually defaulted on their debt last year. So that's another one that has gone to the back of the bus, as it were. Kenya obviously is on my radar, as well as Tanzania and Uganda, Rwanda, and this East African part of the world. Kenya being by far the largest market here is one that I obviously have great exposure to. But at the moment, I would say I'm underweight Kenya relative to where I could go if they sort out. The bottom line is that there's some sort of policy shock liable to come in Kenya. There's elections this year and tax increases, fuel excise increases, this sort of stuff. You find the money somehow. Obviously, the best outcome would be to have the economy grow, and then tax revenues would go up automatically. But unfortunately, they're going to be tinkering with stuff. To that point, the banks in Kenya, a number of years ago, the central bank there actually introduced an interest rate cap. So they mandated that banks could not make loans charging above a certain rate of interest. Essentially a price control on bank funding. And that was a huge shock to the system at that time. And they still haven't quite overcome it. They repealed that law, and the banks are technically free to set their interest rates at whatever the market will bear. But conveniently, the central bank hasn't checked any of the risk pricing models that the banks have had to see models as yet. So it's kind of, they changed the law to allow free market interest rates, but in practice, they're still charging fixed rates that were mandated from 5-6 years ago, whenever it was. So there are these issues that still have to wash through the system in Kenya before I would be comfortable going back to what one might call a full weight or an overweight in that market. That said, we do own 3 Kenyan stocks, and I'm in the market to buy more of one of those stocks. We do not own Safaricom, not because I don't think it's a great business, but I'm a value investor, and my mandate is to find great businesses that are also trading at valuations low enough that I think that the valuations can double.
Yeah.
And Safaricom just hasn't been in that zone since I started my fund last October. We began trading. Had my fund been up and running in April, May, June, I would have bought Safaricom because it was down in the mid to high 20s. It's up at 39 shillings a share now. It had already got back to 30 shillings a share when I started my fund. So that's another reason why our exposure to Kenya is not as big as some other funds and indices are, because of Safaricom being, Safaricom is like 70% of the index in Kenya.
Yeah.
If you don't own that, you're kind of automatically underweight. We do own one of the banks, and we own an insurance company, and then we are buying the tobacco company. British American Tobacco has a Kenyan division, which is extremely profitable, and it has been trading at reasonable valuations. It's been on about a 10% dividend yield, high single-digit PE. So that was an attractive entry point for that one. Almost unheard of, it's been much higher valued in the past. But there have been sellers around, I guess. ESG movement is quite strong in Western markets these days. So you probably have funds that have legacy positions in these tobacco stocks that they're not allowed to hold anymore. So they become what I call price insensitive sellers. And I love to buy from price insensitive sellers. You asked about the other thing. So let's just see here. I can tell you we've got about 1/8 of the fund allocated to Kenya at the moment. So 12.5%.
Okay.
Actually spread across 3 different stocks. The biggest position being in BAT, Kenya.
Yeah.
Tobacco stock.
So yeah, Tim, I understand why you would be underweight Kenya at this point, seeing all the risk that that's involved with the currency, and then also the elections that are going to be coming up pretty soon. But then again, this market, Kenya has so much potential that you cannot leave it out, and there are gems where you just see that the valuations are so attractive. You just need to buy them. And again, Africa, we discussed this last time. It's always 2 steps forward, 1 step back, 2 steps forward. And when you look at the index, the NSE 20 index, so the index of the Nairobi Securities Exchange, it's down 65% from peak in 2015. So it would appear that a large part of the step back has already taken hold. So that's quite positive as well. Now, there are some agricultural companies that are listed on the NSE. I was quite intrigued. Some of them are paying out decent dividend yields. They seem to be sitting on insane amounts of agricultural land. Are those stocks that you're looking at? Are you considering them? What's your take?
Okay, so yeah, Kenya has a very strong agricultural export economy. Never mind that they're pretty much self-sufficient in most agricultural products as well. Historically, there were a lot of plantations, a lot of British companies that grow stuff in Kenya and export it to Europe. We were talking offline earlier about Unilever and companies like that. They have plantations all over Africa. In Kenya, the listed companies that I have looked at briefly would include Williamson Tea Company, which I think is one of the ones that you mentioned is paying out a very handsome dividend yield at the moment. And then the other one is a company called Kakuzi, which is part of the Camella PLC conglomerate, which is listed in London. So in Kenya, they have avocado plantations, which to me is an interesting industry. Very high margin available from air freighted export to avocados are very popular. Superfoods they've been marketed as. So, and they grow like wildfire here in East Africa, and they're really tasty. I don't know whether you had the chance
I
to see
ate
them.
so many avocados in my month in Kenya. They're going for, I don't know, like 15, 20 cents a piece. I was having for
Quality is
breakfast.
amazing.
Yeah, breakfast, lunch, dinner, like avocado.
So I looked at these companies in the past. The issue with them is that they're more suitable for a private investor with a smaller amount of capital, because it's hard to put a decent chunk of capital to work in these names. They're not as liquid as the stocks that my fund ideally needs to find. So if you're an individual investor looking at Kenya, definitely check out those agricultural stocks. I think they're of great interest. Kakuzi did have a little bit of baggage around it. There was some historical labor settlement claims that they're still arguing about in the court, and there's the possibility that they have to make a one-off payment of many years of wages that were underpaid, according to the people who are the claimants. And then there was some bad press around historical allegations of mistreatment of workers and things like that was doing the rounds recently. But that's I think now been settled. The company settled that lawsuit. So it's only the labor claim that's still a bit of an uncertainty. So that would explain why the share price maybe is a bit lower than one would expect. Just again, uncertainty. Which markets don't like. But I think definitely these companies have a great long-term future doing what they already do, exporting great agricultural produce to Europe. But as you mentioned, they also have significant land banks. And I know that in and around Nairobi, a lot of the property development that's taken place on the outskirts of town as the city has grown is old plantation or old agricultural land that's been converted. So you obviously have that possibility as well in the future that these companies can sell part of their land for higher value added purposes.
Cool. Yeah, and I saw Williamson Tea had a bit of an oddity on its financial statements. The high dividends came out of cash rather than profit, so they didn't seem to make much of a profit, but they paid a very high dividend yield.
Probably paying out of retained earnings. So yeah, you need to investigate always. You can't just sort of look at the headline numbers. You got to dig a little below and see whether it's sustainable.
Yeah, very important. As always, do your own due diligence to everyone involved here. About the Nairobi Securities Exchange, what's your take on it? Are you looking to invest in it?
The company itself. So step back for a second and just say that stock exchanges generally around the world are a very profitable business because they're essentially a mandated monopoly. There are very few countries where there are sort of competing exchanges. I guess in the US, the NYSE competes with the NASDAQ and stuff like that. But they're all extremely profitable. And it's good that my universe here in Africa contains several listed stock exchanges. I do own shares for the fund in the Dar es Salaam Stock Exchange here in Tanzania. I've looked at the Nairobi Securities Exchange. At the moment, it's not trading at a valuation that's low enough to interest my fund, but it is still a very profitable business and has good growth potential. The historical numbers from last year were a lot better than the ones from 2019. They were able to cut out a lot of expenses. Their returns on equity, they're improving. And it's a solid business. Nothing wrong with it at all. Good potential. But I want both great business potential and cheap valuation. And at the moment, it's the cheap valuation that's not quite there. That's essentially the bottom line on that.
Okay, clear. Great. Tim, thank you very much for your time today. How can people find out more about your fund?
So the fund has its own website, africanlionsfund.com. We're structured as a private fund, which means that you do have to lodge an account and log in behind a barrier in order to download the documents, just so that we can track that the offer has been made to you and you only. But all the information is there if you register an account at africanlionsfund.com. And then I'm also writing a newsletter, which I believe you have kindly been recommending that people check out. I'm on Twitter as well.
So the link to Tim's travel and investment newsletter is below. I really recommend that people sign up to it. It's like a bit like the Wandering Investor, but in Africa and focused on equities. And you also have a Telegram channel that's good, where you post daily about like everything you see as you travel around the continent.
Telegram channel is also open to everybody. You don't have to be an investor in the fund. It's a great way for people to follow along with what I'm doing here with my boots on the ground. That's the way I look at it.
Great. Link below as well. Fantastic. Tim, thanks for your time.
All right, Ladislas. Great to catch up. Okay. Bye for now.